Hello students, welcome again to the class. This is the fourth video. We were discussing income from salary, and the important component of our discussion was is to calculate the perquisite. I discussed income from salary in the previous video. Now, as I told you that some terms to be defined as per section 2 of the income tax ordinance 94. For example, salary, we discussed the definition of salary under section 2 clause 58. There's definition of wages. It means that wages means wages whenever it is given to the worker. It's wages, meaning of annuity is a payment made to the employer to the employee on yearly basis. Gratuity means the gratuity one-time payment made to the employee from the employer after retirement. And section 2 clause 45 defines perquisites, and perquisites is important for us, so we'll be defining perquisites. Please go through section 2 clause 45. Perquisite means the followings. It says that perquisite means the followings: any payment made to an employee by an employer in the form of cash or in any other form, excluding basic salary, festival bonus, incentive bonus, not exceeding 10% of disclosed profit or of relevant income year, arrears salary, advance salary, leave encashment, or leave fare assistance and overtime. So these are the items that not to be included in the definition of the perquisite. So perquisite basically means any benefit received from the employer by the employee in cash or in kind, excluding the items as mentioned in section 2 clause 45. So now I'll go to rule 33 capital A to capital J for the valuation of perquisite. So if you go to part 2 of the income tax manual, you can get it from the web, as I told you earlier. Income tax manual part 2, you can get this one. Rule 33 deals with the valuation. It says valuation or calculation of perquisites. So as I told you earlier, the perquisites are house rent allowance, rent-free accommodation, conveyance provided for personal or private use, additional conveyance allowance, free or concessional passage, entertainment allowance, and other benefits. So as per rule 33 capital A to capital J, you can calculate the perquisites. Why we need to calculate perquisites? Because as I told you earlier that some part of portion of perquisite is taxable, some portion of that is not taxable. So we have to identify. Whenever someone says that I received house rent allowance, I received rent-free accommodation, I received conveyance allowance, then we have to identify which portion is taxable and which portion is not. So we only impose tax on the portion of the perquisites which is taxable, and we don't impose tax on the portion which is not taxable. So section rule 33 gives us that calculation. So you have to be very careful about this, and you have to go through well, because this is important for our midterm exam purpose. First of all, I'll be discussing rule 33 capital A. It deals with house rent allowance receivable in cash. So you are receiving house rent allowance from your employer in cash. It says that what the house rent allowance is receivable by the employee in cash, the amount, if any, by which the house rent allowance is receivable exceeds 50% of the basic salary or target 25,000 per month, whichever is less shall be included in his income. So it's a formula. It says that whenever you receive house rent allowance, you take two figures. One is that you take 50% of your basic salary and you take 25,000 taka per month. So you compare with these two amounts. So you first identify whichever is less. 50% of the basic salary is less, or 25,000 taka per month is less. So you compare the amount you receive from your employer with the item which is less. It means that whether 50% of the basic salary is less or whether 25,000 taka per month is less. So whichever is less, you just deduct it from the actual amount you receive from your employer as house rent allowance. So if you have any excess amount comparing with the less amount, then that excess amount will be taxable amount as per Rule 33 capital A. So it says again, please listen well, where the house rent allowance is receivable by the employee in cash, the amount, if any, by which the house rent allowance receivable exceeds 50% of the basic salary or taka 25,000 per month, whichever is less, shall be included in his income. It means that you take two figures, one is 50% of the basic salary and 25,000 per month. You identify which one of these two figures is less. So say for example 25,000 per month is less, so you take this figure. Now you compare this figure, you deduct this figure with the amount you receive from your employer as house rent allowance. So for example, 25,000 is less among these two figures, and you receive 30,000 per month as house rent allowance. So what happens in this case is that, so you are getting 5,000 in excess of 25,000, so you have to pay per month 5,000 excess, whichever you are receiving from your employer, tax on that 5,000. So it means that yearly you pay tax on your house rent allowance 5 into 12, 60,000 taka. If you're not sure about the calculation, please go through. I'll try to upload an example with solution regarding the calculation of perquisites. Now I come back to Rule 33 capital B, which deals with rent-free accommodation. Where the employee is provided with rent-free accommodation, the rental value of the accommodation or 25% of the basic salary of the employee, whichever is less, shall be included in his income. So here again you take two and you compare, and then you impose tax on that. 33B2 says, what the accommodation is provided to the employee at a concessional rate, the difference between the rent actually paid by him and the amount determined to be includable in his employee's salary under sub-rule 1 shall be added to his income. So whenever you get rent-free accommodation, so rent-free accommodation, you get it rent-free, but if you want to get one, a higher one, then you have to pay rent. So the actual rental value or the 25% of the basic salary of the employee, whichever is less, shall be included in your taxable income. That means you have to pay tax on that. If you get a concession, if you get a house for at a concessional rate, so the amount which you pay will be deducted from that calculation. As I told you, I'll be uploading an example for that calculation for that. Now coming back to Rule 33C, conveyance allowance receivable in cash with no conveyance facility. You are getting conveyance allowance cash. So where no conveyance is provided by the employer and the conveyance allowance is receivable by the employee in cash, the allowance receivable in excess of taka 30,000 shall be included in his income. So it means that conveyance allowance up to 30,000 taka per year is tax free, and if you receive something beyond 30,000, that you have to pay tax on that. That is Rule 33C. Now I'll be coming to Rule 33D, conveyance provided for personal or private use. Where the conveyance is provided by the employer for the use of the employee partly or exclusively for personal or private use, there shall be included in the employee's income an amount equal to 5% or 60,000, whichever is higher, of the employee's basic salary. So whenever you are getting it for your personal or private use, you are getting a car, then some portion, an amount equal to 5% or 60%, whichever is higher, of the employee's basic salary will be added to your income. So you take two figures, 5% of the basic salary or 60% of the or 60% per annum. So among these two figures, whichever is higher, you just pay tax on that. So it says that again, I go through it, where the conveyance is provided by the employer for the use of the employee partly or exclusively for personal or private purposes, there shall be included in the employee's income an amount equal to 5% or 60%, whichever is higher, of the employee's basic salary. Now I am coming to 33 capital E, which says additional conveyance allowance. So whenever where any allowance is receivable by an employee by an employee in addition to the perquisite mentioned in Rule 33D, the whole amount of such allowance plus the amount determined under Rule 33 shall be included in his income. So if you get any additional conveyance allowance, the whole amount, you have to pay tax on the whole amount in addition to the conveyance allowance, as we discussed in 33D earlier. Now we are coming back to Rule 33G. 33G says free or concessional passage for travel abroad or within Bangladesh. So say for example, you are given some free passage or concessional package to go outside to make holidays and other things. So if your employer gives you the passage as per the terms of the employment, then nothing, you have to pay no tax, nothing will be added in the total income. But if it is beyond the terms of employment, then you have to pay the tax on that amount. So please, you have to note that whenever there is any question of free or concessional passage, then for travel abroad or within Bangladesh, you have to check the conveyance, the terms of employments of the taxpayer or the assessee. If you don't get it, then say you can go either way. You can say it is included in the terms of employment, then nothing will be added. And if you say it is not within the terms of employment, then you can add it for the tax purposes. So section 33G, free or concessional passage for travel abroad or within Bangladesh, is fairly simple. If you go through it, you will understand it. And if you don't, then please drop me some lines. I'll try to make it clear again. And I'll, as I told you, I'll try to make some, upload some documents to make the point clear to you. Rule 33H, which deals with entertainment allowance, it says where an amount is payable to the employee by way of entertainment allowance, the whole of the amounts payable shall be included in his income. No addition on account of his no addition on account on this account shall be however made if free tea, coffee, beverage or like thereof are provided at the office premises during the course of income. So whatever you get as entertainment allowance, you have to pay tax on that, except free tea, coffee and other things. Section 33I deals, capital I deals with medical expenses. It says that where an amount is received or receivable by the employee by way of hospitalization, medical expenses or medical allowance, the amount, if any, so receivable or received exceeds 10% of the basic salary or taka 120,000 annually, whichever is less shall be included in his income. So this is the medical expenses. There are proviso that medical expenses or medical allowances not exceeding taka 10 lakhs received or receivable by an employee being a person with disability shall not be included in his total income. So if a person is with disability, he can receive up to 10 lakhs medical expenses without tax. Medical expenses reimbursed by an employer to an employee other than an employee who is a shareholder, director for a surgery relating to heart, kidney, eye, liver, etc. shall not be included in his total income for such employee. So that's the medical expenses. So please go through it. 33I. Now 33J says other benefits. So we have mentioned from 33 capital A to 33 capital I the perquisites, for example, house rent allowance, medical allowance, entertainment allowance, and we have seen the calculation. Now if you receive other benefits, then those will be categorized in 33J. It says other benefits. It says that where any benefit or annuity not covered by provisions of Rule 33 capital A to 33 capital I is provided to the employee, the members of his household or his dependents, there shall be included in his income an amount equal to the amount which would have been expended by the employee in obtaining such benefit or annuity from an independent source in the same or near locality, had it not been so provided, as reduced by the amount, if any, expanded wholly, necessarily and exclusively in the performance of duties of the office held by him or actually paid by him in cash. So the language itself appears to be a bit complicated, but it's very simple. So if you receive other benefits, then the benefit amount will be taxable. It means that it will be added back to total income. For example, your employer pays you for your daughter's schooling. So the schooling fee, you have to pay tax on the schooling fee. So your employer pays for the marriage ceremony of your son, say for example 500,000 taka. So this is other benefit. So you have to pay tax on that. This is as simple as anything. So that is the calculation of perquisites as per Rule 33 capital A to 33J of the Income Tax Rule Part 2. This is, I'm reiterating the point that this is very important for your exam purpose. So please go through well. I'll try to upload some documents giving example of the calculation of the perquisite. In the next class, we'll be discussing the other heads of income. And now here is the end of the discussion of income from salary, and here's the end of the first class. In the same class, we'll be discussing other heads of income. So please follow the policy regarding the online classes, Zoom classes, Google Meet classes to be held between you and me. Please check the rules and procedures. You will be notified, and these videos will be uploaded in the box, so you can download those videos and you can listen to this time and again, so that you understand this as well while you listen to the videos. Please try to have the materials with you, as downloading those from the website, as I mentioned earlier. So here, thank you very much for participating in the first class of the Law 434 Fiscal Laws of Bangladesh, including customs and VAT. I will see you in the second class with more fascinating issues of the Fiscal Laws of Bangladesh. Until then, please read well the uploaded documents and listen to the videos. Until then, goodbye, take care, and have a good reading, and maintain the safety rules. Thank you very much. See you.